Let's take a look at some charts on Zcash from this week's article on Brave New Coin. So it's no secret that I'm not a big fan of Zcash, but I will try to maintain my objectivity when talking about it. If we compare Zcash to other privacy-capable, privacy-able coins, including Monero, Dash, Decred, Pivx, and Grin, we see that Zcash is still leading in total daily transaction volume. Now there's many caveats with this data, specifically for Monero and Grin. You cannot see the transaction volume for Monero and Grin. The numbers included here for Zcash only include non-shielded transactions, and I assume the same is the case for Dash and Pivx and Decred. Then the non-private transactions are included here. So in general, this infographic is of little value because you can't compare any of these directly to each other, but it's a nice broad overview. We can see that Dash still has more active addresses than Zcash, but Dash also uses on-chain mixing, so there's a lot of details here you have to really pay attention to. Clearly, Monero is leading in market cap and fees, which the fees part may point to scalability issues, also may point to general usage just being at an all-time high right now for Monero. Monero leads in GitHub commits. Zcash, a little down the line there. They have a big update coming in November, which will alter a few things on the network, including the founder's reward, which will be adjusted slightly, but still continue largely unchanged. Arguably, we can split hairs about percentages and say that this is less than that, but there's still a founder's reward. Inflation is still high. Nothing fundamentally is really changing there. And speaking of inflation, if we compare the inflation of just a bunch of different coins, including BTC, most of the privacy coins here, BTC is around 1.8%, Monero is around 2%, Grin is at like 60%, and then you have Zcash at 30%. This is going to drop significantly after November. It should drop to 15% if I think it's a halving. I think that's how that works for Zcash. So it'll drop significantly relative to where it's been for Zcash, but relative to other coins, it's just hard to convince me or anyone that this is a long-term hold play based on development activity and paying people for their work versus other coins with lower inflation. That's just the state of it, right? Like, yes, people need to get paid for their innovative privacy work. Yes, we need to incentivize future developments in cryptocurrencies, which is kind of the argument for the pay structure for Zcash. In my mind, I need to caveat all this stuff because inevitably there's going to be one or two people from the Zcash community raking me over the coals for something I say here, but at the end of the day, you're still triple, quadruple inflation of a comparable coin. So it's hard to be convinced to buy and hold that just in a vacuum. If we look at how the miner rewards distribution is going to change in November, it'll be 80-20 with a majority of it going to ECC, the electric coin company, the main development company. Some of that will be going to Zcash Foundation, who also does ecosystem grant work, promotes the Zcash ecosystem, promotes privacy, promotes thought work on privacy legislation, that sort of thing. They do a bunch of stuff, and then some of it to grants. Inevitably, the grants will be partially community based as far as voting is concerned. I think they're voting on like who's going to decide on the grant, the governance for the grants right now. But a majority of the Zcash people, are going to be deciding on how the money is spent, which is fine. It's just a lot. It's a lot of money to be governed out, basically. When you have a treasury system, 10, 20%, there's always going to be an argument for moving the coin one way or the other. So long as the community and the people in the know can reasonably divvy that out, I think it's fine. And really necessary. If we paid Bitcoin developers what we pay other coins relative to their treasuries, it'd be kind of a different story. Bitcoin developers have to sort of beg and plea for money or get paid from outside places, whereas coins like Zcash, DCR have an internal treasury to pay developers. If we look at shielded and non-shielded, shielded and transparent, however you want to say this, still 20% or less of total Zcash transactions are shielded. Now, I assume this includes all the transactions on the chain, considering this is a Zcash specific website. I don't know why this value doesn't make sense. If I look at, where is it? If I look at Zeek transactions per day, the transaction count here is 4,000, and the total transaction count here is definitely not 4,000. So I don't really know why they're so different. This does not include shielded transactions. So, you know, I don't know who to trust as far as information. One's Coinmetrics, one is ZEC specific website. If we look at developer activity, it's still robust, still continues. There's no like drop off in, this is the Zips GitHub. This is just the general Zcash GitHub. Still tons of activity and development. I know a lot of development communities for certain coins kind of sit on their laurels and just sort of get paid for doing very little work in general. But I wouldn't say that's the case for Zcash. There's definitely active development going on persistently. Looking at transactions and mean transaction sizes for Zcash, according to Coinmetrics, which I should caveat as well. This is non-shielded addresses, which I should caveat as well. That'll affect both of these values. At the end of the day, non-shielded transactions, which are what most people use, I believe, because privacy is optional for Zcash, and you can see how the caveats just keep adding up. Transactions are stagnant, which may continue to be the case so long as more and more people use shielded transactions versus unshielded transactions. So as bearish as this may look in a vacuum, which it does because transactions are way down historically over the past couple of years, you know, the Zcash people can tell you that they're increasing in shielded transactions, so it's not actually as bearish. And my retort would be, I don't actually know. I don't have the data in front of me to look at that. I'd love to see that data, but I just don't have it in front of me. Mean transaction size is also down over the past few years. Not really a bullish or bearish thing, just something to look at and consider. If we look at block sizes and transaction fees, both are basically at all-time lows. And I believe this includes shielded and unshielded transactions. If we compare this to like Monero, for instance, or any other privacy coin, in general on those chains, you do see an increase in block size. You can't exactly compare those one-to-one because of the way those coins scale or the way those coins bake in privacy to the chain. And that's going to change again in November for Zcash. So it's hard to actually use any of these metrics reliably and say like, this means this, or this is bearish, this is bullish. Just in a vacuum, not bullish, right? There aren't very many people using Zcash based on block size. Even if block size was 0 and it was increasing to 10, you could say, all right, there's some increased usage here. What I'm seeing in front of me tells me average block size is 0.05 bytes or megabytes. I'm not sure the scale here, it doesn't matter. The point is, it's just next to nothing, right? I just don't see it. If we look at active addresses, which again are non-shielded addresses, and NVT, which again only includes non-shielded transactions, active addresses are increasing to multi-year highs, which is probably speculation related because most of the exchanges do not enable shielded transactions aside from, I think Gemini has it now. You can't transfer shielded to shielded. You can only transfer like shielded to unshielded or unshielded to shielded. Basically, it can still be tracked, it can still be traced. It's not really privacy. That's just not how privacy works. Unless it's end-to-end. You know, if you're using Proton Mail and you're sending, if you send outside of Proton Mail, right, to like Gmail, then all of a sudden it's tracked and traced, right? But if it's end-to-end, if it's Proton Mail to Proton Mail, if it's XMR, for example, it's arguably untraceable. There are increasingly advanced ways to trace that, but when you see governing bodies pay out bounties to get ways to trace things like Monero or things like Lightning Network, that's a big signal that they're not worried about Zcash from a traceability standpoint. So there's your argument for privacy right there. But if we look at MVT, it is decreasing. That's bullish. Active address is increasing, is bullish. It's undeniably bullish in a vacuum, specifically for this. If we look at MVRV, another one of these inverse metrics to economic utility, like on-chain activity, in general, anything above 0.8 for Monero has been unsustainable from like the bullish side. And recently we've seen that in 2019 and 2020 a few times. Anytime we rose above 0.8, price got smacked down. So it'll be interesting if on-chain activity can keep up with price. And again, this does not include shielded transactions. So this metric as a whole is unreliable and difficult to use because it just doesn't make sense. Like you can't really look at MVRV and get the whole picture, right? But what I'm seeing currently shows 0.8 as the ceiling. Very similar to what happened 2017, 2018. Again, it was way above that, right? Something else you can use this for is bullish and bearish divergences. if you're getting a lower MVRV, lower on-chain activity based on market cap with a higher price, that's a bearish divergence. That says we are overbought here, relative historically. And you can say, well, maybe this is just shielded versus unshielded stuff. And I'd say possibly, right? Like it's impossible to know. So maybe all this stuff really shouldn't even be looked at or valued in any way. One thing that is straightforward is ASICs on the chain and hash rate and difficulty. Now, in a vacuum, looking at this number, this profitability number for this ASIC at this specific time, I don't know how many of these are on the chain. It would be interesting to look at the nounces, which are kind of like the fingerprints of the ASICs to see, like, does this ASIC have a nounce specific to this ASIC? Can we see the percentage that is being mined on the chain? My guess is with this profitability, very few of these exist in the wild, because if this was the case, like profitability would go down because hash rate would go up, which hash rate is still going up, but there's a lot of like game theory here, because if you're able to get your hands on 10 million of these units, you're going to make an insane amount of money, right? Basically, if you can scale this mining farm with this ASIC at this specific time, you're going to make a lot of money very quickly. Now, we want to run into centralization, decentralization issues for Zcash or any proof of work chain when this happens. Geographical distribution, centralization aspects from that point, like if this is all China farmers versus farmers in Nova Scotia or someplace, where they have geothermal. We can talk about electricity costs and types of electricity, dirty electricity, clean electricity. We can have that whole proof of work conversation. At one point in time, there was a concern on Zcash for the amount of ASICs on the chain, and they voted, based on what I can tell, that they don't think it's a big issue or big enough to sort of change the ASIC or adjust the ASIC, consensus algorithm. I think there will be a point in time when they will have to do that. If your chain gets overrun by a single ASIC, that's a big deal from a centralization issue. Let's say this ASIC has a backdoor, or this ASIC is accessible in some way, and all those ASICs get turned into zombies. I mean, this is a big if situation, but a possibility. Then there's a vulnerability in the consensus of the chain, and this just screams like a moth to a flame. Like, where can I buy these? How do I buy these now? As a miner, I mean, I can't imagine. That's why I can't imagine there are a lot of these in the wild, because this is a high cap coin that's easily tradable on an exchange. And this may be providing a decent selling pressure, because if you're making this much money right now, you're probably not holding on to it, is what I'd imagine. I'd imagine you'd be trying to get that ROI on your scaling up. I don't know. Game theory. I'm not a miner. I'm not a mining expert. Just looking at numbers here. And if you look at hash rate since October 2018, it's just 45-degree angle straight up. They adjusted block times somewhere late last year, which adjusted difficulty, but nonetheless, I mean, hash rate just keeps increasing, and it should keep increasing so long as this is insanely profitable. Even the other miners, which aren't even new. I mean, this one's from 2018, and it's second in profitability. So to me, I just don't think there are that many Zcash miners in the wild. If you look at Google Trends for Zcash, down in the dumps, like many coins, not to just pick on Zcash here, but how much excitement in general. You'll see this tick up probably towards November, mid-November, when they have their reward halving, or when the hard fork happens and the upgrades happen. There'll be articles and podcasts and Zuku on CoinDesk saying this is the best thing since sliced bread, stuff like that. There'll be a lot of press on that. So there will be an uptick in Google Trends at that time, and probably price as well, let's be honest here. A lot of speculators are going to step in, just as they are for ETH 2.0 transition or any network upgrade that's of decent value to the chain. Decreasing inflation is a big deal, definitely. Decreasing supply is a big deal. If we look at technicals, long short ratio up here, VPVR, RSI, volume, yearly pivots, 50, 200 EMA. So the biggest thing that pops out to me is the VPVR level. So this is volume at price versus volume per day. And Zcash is currently just consolidating within this $50 to $75 range that historically has had the most volume. So it signals to me that the market thinks this is the right price. Buyers and sellers are basically at an equilibrium until there's some change in market conditions. Price will remain in this zone. It won't go higher, it won't go lower. You just have to expect this goes higher into November. And that's coming from a non-Zcash person, right? Just as a speculative potential. This is probably going higher. EMAs are still bullish but flat, like there's no trend here. It is leaning bullish, but there's no definitive trend. If this breaks 50, then it'll get ugly. Otherwise, you gotta expect this is gonna hit 120, 150, potentially 180 within the next few months. Going into like Q2 2021, I think 180 is a reasonable target. Long shorts are mega long right now, with longs increasing dramatically over the past few months. The last time longs were at an all-time high was kind of a low in price. Typically, you see an inverse relation to open interest and price. So if shorts are at an all-time high, price goes up. If longs are at an all-time high, price goes down. Most people are bad traders. This could represent hedging. This could represent all sorts of stuff. But in general, more people get long at the top than they do at the bottom. More people get short at the bottom than they do at the top. So lots of people getting long right now when price is sideways, which is really the best place to get long if you're convinced we're going higher, which we probably are. Nothing really to speak of on RSI or volume. Just I'd watch 180, 240. I mean, 250 wouldn't surprise me with the lack of inflation or the decrease in inflation and the speculative potential going into the next few months here. Cloud, we're still bearish on where this sits. You want to sit above the cloud. It had a nice little run here, but it's definitely lagging most of the other coins from the bullish department, specifically BTC, and you'll see that on the BTC, Zcash BTC ratio. Definitely below the cloud, below the 200, back in the median line of this bearish pitchfork. Until this is above 0095, the bear trend should remain, aka BTC should still outperform Zcash. Once again, though, you're seeing a ton of volume at this level. So it says to me there's a lot of buyers and sellers here. Price is kind of at an equilibrium. If this level fails, it's going to go low. You're hitting all-time highs, all-time lows. You're hitting the bottom of this pitchfork. It's going to get ugly. So I don't know if this part of the pair is tradable. I'd much rather trade this breakout on Zcash USD than worry about this going to all-time lows or whatever. It's probably not going to outperform BTC in the next few months based on trend metrics, based on fundamentals. I don't know. We don't see companies announcing their treasury in Zcash, for example. So it's going to be hard for Zcash to fundamentally outperform BTC. There's less of a story there, as there is with most altcoins. One last thing I'll say about this is longs here are mega long. So again, if this goes low and these longs get nervous, it'll just keep pushing lower. There's a little bit of a remnant of a bullish divergence here, lower low in price on equal RSI. So overall, unlikely to perform BTC over the next few months. On-chain metrics are difficult to evaluate because it's a mixture of private and non-private transactions. It's difficult to compare Zcash to other privacy coins because it's all over the place as far as what you're able to see on-chain stats-wise. They do have an upgrade coming up that is generally bullish for any chain. I mean, look at ADA, look at Tron. I don't know, any chain with an upgrade that's of decent magnitude as far as moving the needle of progress. So I think Zcash USD is going to be fine over the next few months, maybe 250. That'd probably be the ceiling based on VPVR levels, but I don't expect it to outperform BTC anytime soon.